I'm Melissa Cowart, broker in charge of Redgate Realty. I've invited Preston Culbertson with State Farm to come talk to us about homeowners insurance. I met Preston years ago when he was working with Ag South. So I really thought that he would be a good candidate because he's seen both sides of a transaction. He's seen it from the mortgage side and now from the insurance side. Preston, tell us a little bit about yourself.
Yeah, so thank you. Appreciate opportunity to be here, and we're always excited to bring value to our customers, your customers, the general public. So we appreciate the opportunity to be here. I was with Ag South for several years and did get to learn a good bit on the lending side, and had the opportunity to switch over into State Farm agency, and so been doing that since January the 1st of 2018. So just say 18 months, a little more than that now. And so feel really good about both sides of it. And so, yeah, looking forward to trying to maybe answer some questions and give some good knowledge for our viewers.
Awesome. I've had transactions almost fall apart because of the insurance quotes. People don't realize that that's something that is taken into consideration with your payment. So this is really important for me to have you in here and have you talk about, especially for the first-time home buyers. They don't know or understand really a lot of times how insurance works. So when I am out showing properties, what are some of the things that a potential first-time home buyer should be aware of that's going to affect their overall homeowner insurance prices?
Yeah, and I'm glad we kind of started there because a lot of people don't take the time to run through the insurance portion of it. And I know the first thing that I always want to kind of get out there when I'm working with real estate agents or working with people that are thinking of buying a home, or first-time home buyers that maybe just don't know what they don't know. And the earlier that you can get most pieces of the puzzle into play, the better. And so, we don't always have the first contact. So, when if you're talking to your real estate agent, or if you're talking to a builder, or if you're talking to whomever, give us a call. Give your agent a call and say, hey, this is what I'm thinking about doing. If you know the style of house or the square footage of the home, or just a range, go ahead and get your real estate your insurance agent in play so that they can kind of help you guide through the process. Because what we don't want to have happen is, and we get calls like this all the time, hey, we're closing next week, or hey, we're closing tomorrow even, and
last minute.
and we need this insurance. And so if sometimes we can turn it around in a couple hours. We don't like to do that. So if we have some time to work it appropriately, more time the better.
Okay. All right. And what things are going to affect their overall price? Like I know back from my insurance days, certain locations to fire hydrants, credit score, that kind of stuff, commission. Right. Yeah. What are some of the things that could potentially affect the price of their insurance?
Yeah, absolutely. We do get that question a lot. That an example that I usually give people is say that the buyer and the seller, know each other, or they're very transparent, and they say, hey, what is your insurance run? And they say, yeah, my insurance runs $1,000 a year.
Yeah.
And so new buyers have that in their mind, and so when they come to get a quote, sometimes we give them good news and say, hey, it's less than 1,000, or sometimes we give them bad news and it could be a lot more than 1,000. So it's not just strictly on the property, which a lot of people kind of think that that where is a good driving force. It's not the whole picture. So you mentioned credit. We look at a lot of different reports. We look at overall, the best way for me to describe it is a consumer report, where it takes into account your loss history, takes into account your credit history, takes into account your tenure as far as insurance. So I mean, first-time home buyers, maybe you never had the opportunity to have a homeowner's policy. That goes into the mix for everything. So there's literally about 100 different variables that we price, but I tell people it's not rocket science. We're pricing risk, and so we want to try to get as much of the picture as we can so that we can give you the most accurate price. So, if it's a 4,000 square foot home versus a 1,000 square foot home, the price is going to be different because of coverage, but the person drives a lot of that price as well.
Okay. So it's kind of individual based, and you want to get your base before you start assuming.
Very, very much so. I did one last week for a guy that was moving to Greenwood, and he didn't have a whole lot of time to talk the first time we had our interaction, and so I said, I can dummy quote it. And just plug in the property details, and we had one price, but then when we got his personal information, got everything that we truly need to have a good binding quote or binding coverage, it did change it a little bit. So I tell people, again, get there early, get partnered up with your insurance agent, and try to make sure that they have all of your information, because it is very customized per person and per property.
Okay. And is a newer home going to have cheaper insurance than an older home, like a house that's 1950s that might potentially have some additional risks associated? Would that cause your insurance to go up?
Yeah, absolutely. Good question. We've got a lot of mill houses. We've got a lot of older communities around Greenwood. We also have a lot of newer communities around Greenwood, and so we do get that question a lot. And I hate to give you a two-word answer, but the easy answer is yes. A newer home will rate better.
Okay.
Because you've got a lot of new building codes that, number one, help a lot. You've got a lot of energy efficient building supplies, a lot of different types of appliances. There's a lot of things that you get credit for on an insurance quote.
Okay.
So obviously any credit that you can get to bring down that premium is better.
Yeah.
So newer homes do rate better. Not saying that just because you got a 1950s house, it's going to be horrible for insurance. That's not the case either, because there's upgrades. There's a lot of things that go into play for our quote that, we're not just pricing a 1950 home with, 1950 specs.
Okay. All right. And you mentioned bringing down those premiums a little bit. What are some ways to bring your premiums down? Like, if I do happen to get a quote on a house, homeowner's insurance, and it's just something that I really can't afford, how can I make that come down a little bit? And
I'm glad you asked that too. We're hitting on some really good stuff for people. One quote is not the end of the day as far as insurance. And so what happens a lot of times when we have a good communication line or a good relationship with our customers is, hey, I'm looking at this house. Give me a price as far as insurance. Yeah, I can work you up a price and give it to you. But if it's not within that, loan approval, you got to have a certain. If they say, hey, you're approved for X amount, and they've got an escrow amount that they've got plugged in there, we understand that. We understand you got to work within the parameters that you're given, and so maybe our first quote doesn't work within those parameters. That doesn't mean that agent or that agency can't do a different type of quote. So there's a lot of times where we say, hey, here's what, from the initial beginning, this is what the quote would be. But we can tailor individual coverages. We can tailor the deductibles. We can do a lot of different things to help the customer get what they need as far as moving forward with the transaction.
That's actually kind of a good point, because when I was doing insurance, I saw a lot of if this company had it for this price, had insurance cheaper. But they weren't comparing apples for apples.
Right.
You know what I mean? They're comparing apples to bananas.
Yeah.
Make sure that the policies that you're being quoted are the same product.
Yeah.
You know what I mean? And the same company, the same rating. Like, not all companies are created equal. And so, I've had insurance through one company and never filed a claim. The deductible was low, the policy was low, but when you actually did go to file a claim, there was a lot of resistance, a lot of kickbacks, and just a lot of issues. So I always tell people, not all companies are created equal, and that overall deductible is not the end of the world that you need to look at. You really need to look at the whole company and what you're getting.
Yeah, and you said two things that kind of sparked my mind there. old saying of you pay for what you get is one that I always go back to. But price is important to everybody, and so we understand that, and we want to make it as affordable as we can with appropriate coverage. And so you mentioned comparing coverage. We see a lot where, and I tell our customers this too, that hey, here's the price, and you're shopping around, maybe you're getting some other quotes. That's great, but let's look at it. I'm okay with saying, even if I don't get the business, let's make sure that you got appropriate coverage, because someone comes back with an $800 premium. I can make a homeowner's policy be less than $800 in a year, but you may not like that you have a $10,000 deductible.
Yeah.
I mean, there's some things that just doesn't make sense, and so I tell people, for the value that you can get, make sure that you have the appropriate coverages with the right premium. So there's a give and take there.
Yeah. Well, insurance is one of those things you might save $1 today, but it's going to cost you a lot more later.
That's
so
right.
you have to be really careful with insurance.
That's right.
Now, speaking of different types of insurance, appreciation or depreciation, what is it called?
Correct. Depreciation.
Okay.
A lot of people don't realize that there's different ways that you can insure your home, or any structure, building for that matter. And a lot of times, I know you deal with market value on a daily basis, and that's what people are looking to buy properties off of. But on the insurance side of things, we don't necessarily always have the luxury of dealing with market value. We deal with what we call replacement cost.
Yes.
And so what replacement cost means is we kind of take out the depreciation, or in some cases appreciation. So it's really keen to understand that that, for example, a roof can be depreciated over time, and so roof claims are probably our number one claimed damage loss. And so when you look at a market value or an appreciated type coverage, you may put the roof on 20 years ago and it's depreciated down to next to nothing now. Well, if you've got an actual cash value coverage, then you're not going to get the full replacement cost of that roof. They may say, hey, the roof can be replaced for $10,000, but it's depreciated down to $1,500.
Yeah.
And so when you say, hey, you may save $1 here, but pay a whole lot more on the end, that's what we see. So we always try to price with true replacement cost.
Good.
Which means that, hey, if you've got a 50-year-old roof, we don't look at it as a 50-year-old roof. We're pricing it with the idea that, hey, whatever a roof cost in 2019, that's what we're going to give you, minus your deductible.
And that's so important for homeowners to take into consideration, especially if they don't have a lot of money stuck inside its savings.
Absolutely.
Because if something happens to the house, a tree falls on it, you don't want to have to try to all of a sudden be out of pocket for a roof that you weren't really planning on replacing, but you thought you had a few more years, to kind of think about it.
Right.
Well, now it's destroyed, so you got to do something. You know what I mean? It could get expensive.
Yeah. While we're on claims, I did want to mention a question that we get a lot is in regards to claims or not knowing about filed claims.
Yeah.
And so when we talk with new customers, we're looking at their consumer reports, we're looking at their loss history, we're looking at a lot of different things. And so I share this with our customers and say, hey, by our pricing model, if you've got a claim on your record within the last 3 years, we have to take that into consideration for rating. And so what we find is a lot of times people will have a $0 paid claim, or we'll have people that have a $500 paid claim. And what people don't realize is when you call to make a claim, so say a lightning hits your home, a lightning bolt hit your home and burned up a couple TVs, or whatever the case may be, and you have $1,000 or $2,000 deductible, I always ask the customer, okay, well, how much damage is there? And not expecting the customer to be an expert on a roof or be an expert on water damage or whatever, but we gotta get the professionals involved, a contractor, a roofer, a plumber, or whatever. It's well worth the due diligence to figure out, well, how much damage have I had in this loss before I file a claim. And so what that does is that protects you from having a a zero paid claim that will be rated for when you shop your insurance for another home, or when you're looking at changing coverages or changing insurance agencies, whatever. So big thing with claims, just wanted to give a plug there that when you call your insurance agent or agencies, don't just automatically file a claim. Don't let them file a claim for you before you know the amount of damage in relation to what you've got as far as a deductible. Because if it doesn't benefit you, more than likely you shouldn't pay that. You shouldn't file that claim.
I agree. And so one of the things that I see a lot on my end is I get new buyers and they call me, what type of pipes are in the house? And those kind of like last minute questions when they're trying to price their insurance. What are some things that my buyer clients need to have together, information for you to make your job easier so that you can get a more accurate quote to
Understand,
begin with.
And so there's a handful of things. There's a lot of things that we can pull by public record now, which makes it easy. How far you are from the fire hydrant, you mentioned that earlier. We can do all of that through our software systems. What we don't know is kind of the difference of maybe improvements to the home, renovations to the home. I usually say the big three that we like to know is the quality of construction. Is it hardwood floors? Is it carpet? Is it is it a brick home, sided home? That kind of thing. So quality of construction, the details of the home. The second thing is renovations. Have they replaced the roof in the last several years? That's obviously going to be a difference in rating. Your HVAC system or your plumbing, electrical work, has it been overhauled or has it been changed out? Because plumbing from a 1950, house or building versus plumbing from, being, replumbed from 2012 is going to rate a lot differently. So your agent should be asking these questions. But sometimes they're just plugging in numbers and trying to give you a quick price. But take the time to give all of the details about the home that you can, because every little bit counts as far as rating.
Absolutely. And, for the real estate standpoint, you can always ask your real estate agent for the copy of the seller's disclosure. You should already have it on file, but it's on that seller's disclosure, or could be potentially on that seller's disclosure, what type of piping they have, any updates or the age of the roof. If that current homeowner knows it, then it should be on that disclosure.
Right.
And they can take that disclosure and have a little bit more of an understanding.
That would be great. Yeah.
So that's something that you guys looking to buy can ask for ahead of time. Once you, when you go to write your offer on the house, initially you need to see that seller's disclosure before you even sign a contract. So just keep a copy of that in your file to take with you to quote your homeowner's insurance, and that will help out a lot. So.
The appraisal is another thing that I would mention in regards to that. Depending on when we come into play with the appraisal, it typically will have a replacement cost section.
Yes.
And so they will have effective ages. They will have a lot of different things. So if you don't know about a house, if you don't know, say, I don't know when they replaced the roof, or maybe the owner doesn't know. Maybe the owner doesn't know. Well, maybe it was 15 years ago. Maybe it was 25 years ago. We get that a lot of times. So sometimes the appraisal can help when we're missing some pieces of the puzzle from an effective age standpoint.
What about personal liability?
Yeah, so liability is one of the most important and major coverages in a homeowner's policy. And so a lot of people, get caught up on, okay, if a tree falls on my house, am I covered? What kind of coverage do I have for property damage? Yeah. And they don't pay attention to the liability section. So if your agent is not explaining that, okay, hey, here are the all the coverages that you have, particularly the liability coverage, make sure that you ask about it, because liability is a very, very important coverage. I say that because most homeowners will start at $100,000 of personal liability, and they'll go up from there. It is not the most expensive coverage, which, for example, for us in our agency, we bump it from $100 to $300 almost all homeowners, just because it's like a $9 to $12 difference a year. So for less than $1 a year, you can get $200,000 more of coverage. Yeah. So the economies of scale there is very affordable. Yeah. The other thing that I mentioned with liability is I know that you list a lot of rural properties, a lot of farms, and so we get into where, say that you have 20, 30, 40 acres in a home, and you're going to run some cows, or you're going to have some horses, or you're going to have goats, any type of livestock. be very careful in regards to liability for those animals. And so homeowners does have personal liability coverage.
Yeah.
But when you get into, okay, do you sell those animals? Are they used as portion of a business? You don't even have to have a organized business or an LLC as far as the business.
Yeah.
If you're selling those animals, or if you're training those animals, breeding those animals, whatever, that's going to fall into a business liability. And a lot of people don't realize that, okay, your homeowners covers you individually, personally. But if something happens on these properties with, and I say livestock just comes to mind, then you're getting into the business liability. And so there are very affordable farm liability, business liability policies that you can have that should be above and beyond, that go more so in the direction outside of personal liability. So we always, if you're not having that conversation, hey, I'm buying a 50-acre farm, and I'm, got the house on, I'm going to live there, but I'm also going to be running a farm, or I'm going to be doing some other business. Maybe it's another business that you're running out of the barn, or maybe it's a business you're running out of your home. Make sure you're asking your insurance agent about business liability.
Yes. Also, I would like to throw in there, talk to them about your trees if you have timber value on your property, because that's not necessarily something that's bundled into your homeowner's insurance. If you have 50-something acres, you could potentially have a lot of money into timber. My parents recently suffered a timber theft. It happens. People steal trees. You wouldn't believe it, but they will go in and log your property, and there's a lot of value that they're stealing there. Yeah,
and again, that goes into the business liability. There are specialized policies that are just for, in this case, timber. There are timber insurance that deal directly with that. So, don't think just automatically that it's covered under your homeowners. Sometimes we can try to find a way that maybe we can help out. But when you start talking about on the business side of things, most of the time it's ruled out because of business liability.
Yeah. Well, and here's a great point to this, is that you need to have a good relationship with your insurance agent, and you need to have a relationship that you can talk to them about what's important to you. So if it's important to you that you have replacement or any type of coverage for your timber or a special piece of jewelry, you need to go ahead and make sure your insurance agent's aware of that instead of just assuming that it's covered.
Absolutely. And we stress with our team at our agency that it's our job to protect the income and assets of our customers. And so getting into asking, what is important to you? What are your assets? What are you planning on doing? What are we needing to protect? Your insurance agencies should be asking those questions. Again, a lot of time it's kind of a wham bam. Let's get this in place to get this, get this property. But slow down. Take 15, 20 minutes. Sit down. We prefer face to face, and sit down and talk and say, hey, we want to make sure that we are adequately covered, because if something does happen, we want to make sure that we can put you back the way that you were.
Yeah, definitely. And now for the people that buy a home or have owned a home for a long time, how often do you think that they need to be reviewing their policy?
Yeah, there's a lot of different schools of thought with this. We try every year to 2 years, and that is. What most people would say, man, that is really frequent.
Yeah.
Well, what we find is that there's a lot of people that have a lot of changes, a lot of life changes. Even if you're 50, 60 years old, maybe you are having empty nest. Maybe you've got grandchildren. There's a lot of different things changing. Outside of just homeowners policy that maybe we can help with. And so, I say if you're not meeting and spending about 20, 30 minutes or maybe longer with your insurance agent at least every couple of years, then you're probably missing some things.
Yeah. Well, and then I think it's important too for your homeowner's insurance to make sure that it's keeping up with the market value.
Absolutely.
So, if you've got it at what the replacement cost would have been 10 years ago when you bought the house, it may not actually be giving you full coverage right now. So.
Very, very good point. We have some pace points with inflation, but again, that's more of a national level, 50,000 foot level. There's ways that you can move your coverages up and down. You can adjust your coverages based off of your replacement costs. We have we offer all of our customers, we can come out, take a look at the house, re-inspect it. Maybe you just made a lot of renovations. Maybe you added square footage. We can come in, and it's not like once we set that coverage amount that it's there forever.
Yeah.
We want to be updating. We want to be modernizing, customizing. We want to be changing those coverages to fit what they need to be.
Okay. And do you have anything else you want to make sure that we didn't cover?
Yeah, deductibles would be the only other thing that I would probably want to mention specifically.
Okay.
A lot of people don't pay attention to what their deductibles are. If you don't know what your deductible is, then ask your agent. You can always change that as well. So we have a lot of people that when we're meeting with them for the first time, since we're a newer agency, and they say, "Man, I didn't know my deductible was $3,000. Man, I wouldn't have $3,000 if something happened tomorrow."
Yeah.
We can reduce that deductible.
Okay.
Now, obviously, that's going to tinker with the price of premium, but sometimes maybe the opportunity cost there is worth it.
Yeah.
The other thing is, when you're looking at buying a property, not to manipulate what we see a lot of times where we say, "Hey, we're just throwing a really high deductible and go back and change it later." We've seen a lot of instances where people get caught in that bad loop where, hey, I'm okay with putting a $5,000, a $10,000, or maybe it's a percentage deductible, and they say, "Man, I'm loving this $600 a year insurance premium," and then they forget about it. And then something happens, and they say, "Man, I've got to pay $5,000. Man, I've got to pay $10,000. This is a lot of money." We run into that too. So it works both ways. But again, meeting with your agent, talking through, what your coverages are, what your deductibles are, maybe where your claim history is. It's too important not to have that conversation.
Yeah, I agree. Absolutely agree. Now, please tell everybody where they can find more information about you.
Yeah, absolutely.
And a little bit about your agency.
Yeah.
And what do you love about working
for
State Farm?
Yeah. This is the easy part.
Okay.
No, our agency is the Preston Culbertson State Farm Agency. We're located at 1325 Montague Avenue Extension, right across the street from Aldi's. So we use Aldi's as our landmark because everybody most of the time in Greenwood or the surrounding area knows where Aldi's is. So we're on the other corner. We do have a 4-person team, myself and 3 other agents that's in our office, Cassie, Christina, and Ashton. We all do the same thing. A lot of times you'll walk in and say, "Well, hey, this person doesn't handle this," or we pride ourselves on being generalist for all of insurance. So everybody can help everybody with everything that we offer. Our phone number is 864-223-2007. Call us anytime. We have a service center that's 24/7, no matter what day it is, if it's a holiday. So we work 24/7. And what I love about it is truly the relationship part. You hit on that just a minute ago. No matter if I was with what I did before or what with insurance now, the most important part of our jobs and what I love the most is being able to sit down face to face with people and say, "Hey, how can I help? How can I?" Our slogan is "Help life go right." Everybody thinks of insurance when things bad happen. That's when they call us. We want to make sure that when they do happen, that we can make sure that we put it back going right. And so customer interaction, sitting down, getting to know people, making sure that if something does bad happen, we know for sure, without a shadow of doubt, that we've got you covered. We've got the right coverages, we've got the right limits, and they know what to expect.
Thank you so much for watching. Preston, I know that you probably have a website. You didn't mention it.
Yeah,
right?
I know. I'm sorry. And in today's world, we do a lot online as well. Our website is www.prestonculbertson.com. PrestonCulbertson.com. So thank you for mentioning that.
You're welcome. If you guys didn't catch all of that information or have time to write it down, please feel free to message me, reach out to me either which way you want, and I'll be happy to put you into connection with Preston. Also, make sure you check out our blog. It's at redgatesc.com. I'll be doing kind of a quick run through on what we've talked about today, and I'll also include the information, his contact information in there. Thanks for watching. I hope that we answered all your questions. If we didn't, let us know so that we can, get you the answers that you're looking for to help your transactions run smoothly.